listen up. We need to talk about AMD and their earnings. I am a little bit late on the video, but without further ado, we're going to get right into it. So, little recap. AMD had a triple beat. They had adjusted EPS, non-GAAP, at 1.66 versus 1.61 expected. They had revenue at 11.5 billion, which is up 50% year over year versus 11.31 billion expected. And data center revenue was 6.7 billion, and that's more than double year over year. They raised their revenue outlook to approximately 13 billion, beating expectations of 12.5 billion. And a little update on what's going on with Helios is that Lisa Su has confirmed the active production ramp of Helios starting in Q3 2026. Strong customer demand and verified customers for the launch of the Helios racks include OpenAI, Meta, Anthropic, Microsoft, and Oracle. There's a lot more customers, I should say, that are going to be taking part in this AMD product once it launches. But these are just some of the biggest names that I thought I wanted to bring up. On to the guidance call. So, Lisa Su was questioned about data center growth, only growing 100%. And in response to this, she said something along the lines of growth going to end up being well above those numbers. And basically, if you can read between the lines, this is basically going to mean that upcoming quarters is going to have an extreme upside, because whenever Lisa Su does report, or the company does report their expectations for the next quarter, the coming quarters, they pretty much always sandbag the numbers so they're able to beat and raise every single time. So if she's going to say it's well above those numbers, it's not just going to be well above, it's going to be well above those numbers. So it's very good looking for the company outlook in the next coming quarters. And another thing that really brought the stock down is going to be the CapEx increase. And honestly, I don't think it's that big of an issue. I think people maybe look at it and they get scared because they see the term CapEx and they're like, oh, shoot, it's increasing. Listen, they're going to have to spend money if they're seeing this much demand. They're growing insane amounts of revenue. They're looking to take share in a broadening CPU and GPU market. They are beating revenue. They're still growing margins. Everything's looking great for the company. It's never looked any better. So if they have to spend a little bit more on CapEx, it really doesn't matter. I think a lot of people are confusing this with CapEx from maybe a company like Meta or Amazon or something like that, where it's like CapEx return isn't really guaranteed. Of course, nothing is guaranteed, but the return that AMD is going to get on the CapEx they're spending right now is going to be very likely compared to a company like Meta, where the CapEx return is up in the air whether they actually see that or not. So I think a lot of people are just concerned about that when in reality it's nothing to worry about. The main also thing that could have driven the stock down as well is the fact that the the guidance and the beat, it wasn't anything crazy. And personally, I thought they were going to come in with some extreme beat and raise guidance tremendously, and it was going to be a blowout quarter, but obviously it didn't happen. It was a decent beat, decent, but I don't think it was enough for the market. Of course, the stock has recovered since, pretty much trading at, I believe, around where it was before earnings. And I think the stock, as of right now, is still an amazing buy. The company is looking better than ever. And I think my 1 year price target, or I should say my January price target, is still going to be $700. And my 1 to 2 year price target is 1,000 plus. I think that in the long term, the stock is a $1,500 company or more. And I think as of right now, it's a great investment. So thank you guys for listening. I have to get off and do my Celsius earnings report. We have a lot to talk about with that stock as well, and possibly ELF as well. All right, I'll see you guys next time. Thank you.